It was a week full of good news. The Dow is on its longest winning streak since January, and for the month of October, it's now up more than 11%, on track for the biggest monthly gain in more than 24 years. The gross domestic product expanded 2.5% in July to September, and that's nearly double the previous growth. So does this mean we have avoided a second recession, and are we finally on the right track? Joining us now is Michael Santoli, senior editor at Barron. Great to have you with us, Michael.
Good morning, Rebecca.
So that's the question. I mean, so many times the information, the data has started to look better,
yes,
but we haven't really gotten to a turning point. Do you think this is really it?
I wouldn't call it a turning point. It's definitely moderately encouraging relative to what we saw in the first half of the year in terms of economic growth, and especially relative to what we were fearing 2 or 3 months ago, that maybe the third quarter would have somewhere close to zero. Now we have 2.5%. It certainly means that things have firmed up in the economy, but I do think we're in for this for a little while, a little bit of a bumpy recovery, kind of fits and starts, simply because we don't have a lot of the tailwinds that we've had in previous recoveries.
The consumer, though, it looks like they're coming out of hibernation a bit. I mean, consumer spending, consumer confidence, both improving in spite of the fact that Wall Street, Main Street, the economists expect it to not be the case. We are spending a little more.
We're spending a little more. I would say it's basically below the very long-term trend in terms of consumer growth, but it definitely shows that the consumers are kind of out of the bunker. Essentially, there's no more. In fact, there are fewer absolute unemployed people in the country this year versus last year. That's how we measure economic statistics. So those who have a job are certainly kind of on a more normal spending pace at this point. It definitely means that we have some version of normalcy back in much of the economy.
So much of the focus lately has been on Europe, the fact that they're facing their own debt crisis there, maybe another recession there as well. Back in the United States, we have some important deadlines coming up with Congress. November 23, the bipartisan committee has to come up with a deal on reducing the country's debt.
Yes.
What does that mean for the economy?
Well, I think we have to separate the economy, the shorter-term course for the economy, and this very long-term debate about the sort of structural deficit and debt reform that we all want to see come out of this committee and come out of Congress in general. I do think that has the possibility, if in fact it kind of deteriorates into a lot of sniping the way the debt ceiling debate did, it definitely could weigh on business and consumer psychology. It really could sour people just on the general state of things again. I think that's a risk, but I do think at some point, look, it is a deadline. Something has to come out of it. If they don't get to the sort of mandated amount of projected savings, then we kick into a new process. But I don't really think that there's high hopes, whether in the markets or on Main Street, for some grand solution in a few weeks.
There's expectation we're going to see a lot of the same thing we've already seen this year.
Yes, apparently.
Michael Santoli, thanks. We appreciate it. Have a great weekend.